We are live. Here she is. Here's Kyle.
Piece of cake, everyone.
Let's start the show, shall we, and give you just a couple more minutes. Good morning, everybody. My name is Anne.Rossley. I'm here with my dear friend and colleague, Kyle Harvey. We're with Beard & Warner's Gold Coast office in downtown Chicago, and we'd like to come to you every week to talk about real estate. Good morning, Kyle.
Good morning. The coffee is more important this morning than usual.
Glad to have you back from Paris.
Thank you. It's good to be back, believe it or not. Paris is wonderful, but Chicago is wonderful too.
Nothing beats Chicago. Absolutely.
Nothing beats Chicago.
So, folks, today we're going to talk about the elephant in the room, mortgage rates. We're going to talk to you about statistics and what's going on. And anything else we're going to talk about, Kyle?
We're going to talk about the fact that Verizon's trying to tell me that I'm running low on data. We're gonna really sort of do a deep dive into what's going on in this market and how you can be successful in this market nonetheless.
I love it. All right, we're ready to talk stats. I'm going to run through them quickly, but I do have new data today since we're into a new month. Okay, give me a second here because I want to take off our names, and B, find the dang screen on my computer. There it is. You know, you have windows, everybody, overlapping. That's what this is. I've got windows overlapping. Okay. As always, we're going to talk Chicago lakefront communities. First, attached, which includes condos, townhomes, and co-ops. Median sales price, $420,000, up 1.8% versus same time last year. Units for sale, 3,400, down 29% versus previous year. And we had 701 condos go under contract. That's this number at the bottom of the line here. Compare that to 1,859 earlier in the year, and that shows you how sales have dropped off. Closed in August, I have to think a minute, 839 was down almost 30% versus previous year. Our high was June, where we had 1726. Properties closed year to date, 11,293. That's down 11% versus previous year to date. However, last year was up 53% versus the previous year. Month supply, and this is a real weird number. Wouldn't you agree, Kyle? 3.0 makes it sound like a bustling seller's market, but demand has dropped off so much. I think people are removing their properties from the market.
Also, with their low interest rates or no interest, that people sometimes own their properties completely outright. They're like, do I really want to start paying all this money on interest?
Right.
Yeah.
All right. Single family homes. We're up to $1,261,000 as our median sales price. That's up 8.7% versus previous year. Number of homes for sale last month, 298. That's down 17%. That's where this dot is right here. The high was in June of 21 at 421.
Wow.
Homes under contract, 74, down 22.2%. Closed, 89, down 22.6% versus previous year. And keep in mind, everybody, last year was a record year. All right, number of homes closed year to date, 1,060 in the lakefront communities. That's down 18.1%. Month supply, 2.7 is up 3.8. You can see we've come up in inventory.
But barely, yeah.
Yeah. All right. This is, boy, I want everybody to know this now before I come and talk to you about selling your home All those people who say, I just want them to give me a bid. I'm not seeing a bid. Why am I not getting a bid? Well, here it is. They're not going to give you a bid until you're at your strike price, because sales price is on average 98% of list price. Now at the high, when we had multiple offers, we were at 99.3, but still 98% of list price is so close. People are not throwing out wild offers. All right, on single family.
Though,
Yes.
remind me to come back, because I've got a story for you on that point.
Okay. Showings per listing, 3.3. This is less of a lagging indicator than all the other things we looked at. And it's down 14% versus previous year. And we were up at 7 here in February. This is showing index. Now we're going, oh, this is August. Okay, this is good. Usually they don't publish these so quickly. 139 versus 100 in January of 2014. And you can see that Chicago is down more so by a little than Midwest or the United States. And that's it, folks. Okay. That's housing stats. Now talk to me about sales prices.
So this is why you want your sellers, you want your buyers to be represented by professional real estate brokers, and somebody of the skill set of Anne.Rossley, or me.
Yes, thank you.
Thank you.
Throw yourself in that bucket there.
Okay, so there is a condo in the Gold Coast that is overpriced for the building, because the beautiful apartment was remodeled, overly invested in. And I get it. I'm about to do that for myself. I don't recommend it, but if you want to get out. And my buyer didn't want to make an offer. She loved it, did not want to make an offer. And I said, make an offer. And we stuck to we got it, the price where it should have sold at. We're under contract. It's a long road to closing, but we're under contract because we knew that this person really wanted an offer, and to wait might force us to lose the place.
Right.
But most buyers, and even my buyers, are like, I can't deal with the stress of negotiation. I want them to list it at the price where I want to buy it. And the answer is, well, I also, I want to sprout angel's wings, but people aren't there yet. Right. So sellers, the message from this is, sellers, you will get more buyers, to Anne's data point up there, if you list it where it's likely to sell and listen to your agent where that is. And buyers, if it's priced over and the selling agent says, just give us an offer, give an offer where it's supposed to set, where it's supposed to land, and then stick. That's my advice. Cheers.
Good advice. Drink up your coffee there, girl. All right, so
what shall we talk about? What's one of the things that this seller was expecting or hoping for was that that they would get a young family to buy this unit. And a young family is one of the people most affected by what the real challenge to the real estate market right now, in terms of both inventory and buyer activity, which is interest rates.
Right.
Sellers don't want to. You're going to see lots of color as the light changes in this room that I'm in. Sellers don't have a place to go because they don't want to trade a low interest rate for a higher interest rate, or a significantly higher interest rate. And buyers are sort of thinking, good gosh, where am I on this? So Anne, take us through, please.
All right. Well, we have had 6 weeks in a row of rising interest rates nationwide. And we're looking now at a chart from Freddie Mac talking about average interest rates across the U.S. but these actually look more benign than what was happening as of Friday of this week. So just to show you, we're plugging along between 3 and 4%. At the beginning of this year, we were at 3.3. We're more than twice what we were in interest rates since the beginning of the year. That's causing some of our clients to get a little nervous. And with appreciation, mortgage payments have really gone up. In 2020, typical mortgage payment was $1,020 per month. It's almost doubled. Pending home sales are down nationwide, but in the Midwest, not as much. And I'll get to that in a minute. But buyer demand is rebalancing. That's the word, Kyle. I always like positive.
That's a euphemism.
Yeah. No, don't say that.
Today's euphemism is rebalancing.
I was at an investor talk the other night and he kept saying dislocated markets. I'm like, okay, down 13.5. So, not so bad. Okay, but here's the important slide. And this is what Kyle and I were putting our heads together yesterday. As of Friday, going into the weekend, the mortgage rate was 7.5%. And the lenders were telling me, and I don't know, I'm not an economist, but they were telling me that our expert, Carol Ann, was telling me that a lot of this had to do with what's going on in Great Britain, with the pricing there. It's affected the local markets here. And typically, and what we did 15, 25 years ago was we would get an adjustable rate and it would be significantly less. If I remember, there was a time that it was a differential between like 6 and 4% or something, 2 full points. Right now, a 7-year ARM is only 6.875. Now, when I say right now, everybody, that's as of Friday. They are highly volatile. So don't look at this on the tape and count it as saying that's where rates are today. You got to go to your lender. Kyle and I were chuckling over this. Jumbo rates are 7%.
They're always a little bit lower.
But
and I don't know why, but they are.
And then there's a significant difference in whether you're putting 25 or 20% down. As of Friday, it was 7.125 versus 7.5%. So what does that do? If you were looking at 6.5% for a $400,000 loan, you would have had a payment of $2,258. At 7.5%, you're at $2,796. And it sounds like, oh my gosh, $268 a month. Well, $268.
Wait. $268 a month?
Yeah, I looked at
that. No, that math
right.
Is wrong. It's 500 and change.
Okay, thank you. 500 and change. It's so funny. We talked about that yesterday and neither of us caught it. And now that it's on the page, you're exactly right. Let me make sure my numbers are right here from my notes.
But here.
Oh, no. I was wrong.
Okay.
Misnumbered dyslexic. This number is not 2528. This number is 2528.
Okay, perfect.
So
it really is 268. But that's a lot of money for a lot of people with other costs rising. So I get it. I totally get it.
If you make the switch from a condo high rise to a townhouse, though, you can save that in your monthly assessment. Right?
Absolutely. And there are condos that are in like 3 flats, and other buildings where the HOA is homeowner's assessment, $150, $125. And those are, you take on a little bit more risk because if something goes wrong, you've really got to pony up and there's not a big pool of money to draw in case there's something serious that goes wrong. But often there isn't something really serious that goes wrong. So there are opportunities, but those buildings don't exist in every single neighborhood, wouldn't you say? I mean, they tend to be more outside of the city center. You won't find those in the Gold Coast.
Right.
But
They're a couple.
townhouses make good sense because you can really raise a family, you get some outdoor space.
I think they're
Often,
an undervalued property class right now. People have been
yeah,
wanting
yeah.
kind of, it's in vogue to get a one floor situation. So
Well, as we get older, I'm gonna
who's getting
say,
older? Who's getting older?
well, I've got a bad knee. Um, but you know, but coming back, circling back, appreciation isn't appreciate the rate of appreciation is declining, but
Yeah,
appreciation isn't declining. So
right.
it's not that prices are dropping below where they were, they're just not appreciating as quickly. So and remember, Carol Ann's great advice: you date the rate, you marry the property. So mortgage rates often reflect concerns about where things are going, whether the news is good or bad. Right now, we've got a lot of noise out in the world um, about politics, about the economy, about what's going on in Ukraine, about just there's a lot of news that has got people riled up. And you know what? There are a lot of there's a lot of concern about the state of the pandemic still. It's a holdover. Even though it really feels like we're returning to a new normal, it's still out there making a little bit of a mess. So all of this together is creating uncertainty in the markets, and markets hate uncertainty, and mortgage rates hate uncertainty. So
Right.
but things will start to shake out. People will, especially the economists, will start to figure things out. And remember, you date the rate, and at some point 7%, I'm going to choke on these words, may seem really good, as if we continue to move up, and if we move down, you get a new you refinance.
Right.
So
Right.
that's sort of the way to think, is long term, strategically. And you and I were talking about this. Now is not the time to use the online um, mortgage uh, access point. You need somebody who has been in the business for a while, who has access to tons of products and opportunities. Also, go to your bank, because often a relationship with your bank can get you a good option. But it is the time to not do the one and done. What's the easiest thing for me? It is the time to jump in and really look.
Right.
And your
Well,
thoughts?
to your point, there was an advertisement over the weekend. It doesn't really apply so much today. It applied maybe 3 or 4 weeks ago. A company was saying, get pre-approved with us and you can lock in your rate before you have your contract. Well, rates are very volatile right now, and we would not recommend that you do that. In fact, if you're going to close more than 45 days from today, many advisors are saying float your rate because they think it will stabilize in the next 45 days. I'm not telling you that's the case, but what I'm saying is talk to your lender. Um, I'm just reporting what they tell me. But to Kyle's point, really have a relationship with a lender who knows what they're doing and can advise you. You know, one of the things that we talk about is buying down a rate. It will help somewhat today. There might be a time in the next 2 weeks to 2 months where it'll be a really good viable option for you. The seller, instead of giving you a credit, actually pays points toward getting a cheaper mortgage rate. And that's a possibility. Arms may start to come down some more. So, I mean, there are all kinds of options out there that are available. So that's
The
my point.
people, the people who will win in this market are the people who engage with professionals, who don't try and do it themselves. I mean, there are people out there who can pay cash, and those people will be fine. So I'm not talking to you people. I'm talking to the people who have to borrow. Um, Work with professionals to do it. Um, Rents are not going to get cheaper. It's not like I can ride this out. So really stick to it, work hard, work with professionals, and get it done, because this is your financial future, frankly.
Well, you
And
know what, Kyle, you bring up a really good point here. All of these buyers are on the sidelines. And not all these, but there are many buyers on the sidelines saying rates are so high. I should have bought a year ago. But when you own a property, you're controlling that property. And they still say it's the best hedge against inflation is owning your own property. They are not, nobody's reporting. Well, I take that back. Ivy Zellman is the only one who's saying that prices may go down, but that's nationwide. Every other outlet who predicts, every other professional who predicts, whether it's NAR or Freddie or Fannie, CoreLogic, they're all saying home prices will continue to go up. To your point, not as quickly, but they will continue to go up. And with rents are up like 25% or more in Chicago over last year. So
crazy.
the way to control it is to control your property by owning it. So
Agree.
But
there,
can I
I
bring up
think,
another idea too?
yeah.
This really reminds me of when I first got in the business of like 87, 88, when we had just come off of this huge rush of appreciation on the coasts, both the West Coast and Manhattan. And then everything just went whoop. But the Midwest kind of stayed static. And so I'm going to throw out there, maybe it's okay that we are I'll share it with you. You ready
27.
for this, folks? I've got a really interesting thing going on here.
Okay.
Okay, it's hard to see. So I'm going to, okay. Northport, Sarasota, Bradenton had the greatest year-over-year appreciation of any metro area at 36.4. Okay. Followed by Cape Coral, Fort Myers at 36. Isn't that ironic? Followed by Raleigh, North Carolina at 31%. Followed by Tampa, followed by Jacksonville. Okay. Chicago, number 89 out of the 100 at only 12% year-over-year appreciation. It's down here.
Mm-hmm.
Okay. There are a bunch of other towns, and I can send you the link if you're interested. But my point is, steady goes the race. What's the phrase?
It's the tortoise and the hare thing. Yeah.
Yeah.
Steady wins the race or whatever. Yeah. Whatever.
Right.
Yeah.
But the point is,
slow and steady wins the race.
There you
right?
go. I think there's a lot of comfort to not seeing these highs and lows. I think we're less susceptible to a koof compared to other markets.
Well, I forgot to add to all the uncertainty the fact that there is a huge swath of Florida that is now uninhabitable. And there are people who are thinking, that's my destination, who are thinking,
right.
Climate. Florida now, this month, Texas has had a really hot summer. Arizona, a really hot summer. So I think people are starting to say, well, wait. Mm-hmm. And a place that is steady, people talk about the the Midwest being sort of boring because we're steady as she goes. But in a time of uncertainty and, all this, we got a good climate. Yes, it gets cold in the winter, but that's part of its charm.
That's right.
Kidding. But it's
don't
also
appreciate the summer unless you get the winter.
But it's also why, it holds down the bugs. It makes it a pleasant place to live. Yes, we have to endure winter to have the other great stuff. But so, the Midwest is starting to appear attractive again. Some people are moving to the western side of Michigan to be close to Chicago, but also to have country. But it's the closeness to a great city. It's a acceptable climate. It's all sorts of good things. So I'm just saying, go Chicago, go Chicago.
Yeah. All right.
Yeah. Oh
Anything
my
else you
gosh, we're
want?
running low on time. And here's the thing. I had a whole bunch of stuff to get to, but it was on the other computer in the other room. And we've just discovered we have all sorts of lighting issues in my temporary digs. We'll be back home soon, soon.
When are you going to be back home?
Okay, you know what? Are you trying to pick a fight with me? I don't know. It looks like the end of November. So,
Okay, at some point you're going to have to update us because you're in the trenches and you know all about supply chain issues. You know all about construction in your condo. We're going to want a full report, and I hope you have good before and after photos.
I don't because I live in denial about my own stuff and I'm embarrassed about my own stuff. But I'll go today and take pictures of where we are currently, which
Okay.
is the cabinets are being installed in the itsy bitsy tiny weeny kitchen. So,
Where
um,
you don't cook.
no, I will cook.
Yeah.
Part of I'm living in temporary digs, beautiful apartment, which I'm also listing. Everyone, come get it because it's a darling apartment. And now I'm living here. I'm like, I like this, but I'm back in a kitchen and I'm all of a sudden cooking.
Mm,
But it's a galley kitchen, not a big open craziness kitchen. So I like it.
I love
Anyway,
it. Okay.
enough about me, people. So next week we're going to do a bigger, deeper dive into interest rates.
Right.
Send us your questions. Send us specific questions and we will ask Carol Ann to opine. She might opine sort of generally to get the larger response, but Carol Ann's going to have good answers for us. And she's going to just let you know how to work well with a mortgage broker to get the best possible outcome for you. And then you can decide if you want to move.
Exactly. I love it. Thanks everybody for watching. Send us your comments. Good to see you. We'll see you again next week. Bye-bye.
Bye.